So for those of you just joining and for those of you watching on Facebook, today I'm here with Dr. Robert Minetti. He's a CPA with a million other initials after his name. Came very highly recommended to me from an accounting partner of ours. And he is a renowned expert on the CARES Act, and he's going to help us look at the PPP Forgiveness, things to consider in the future as we head into these uncharted territories. My name is Kevin Hennessy. I'm the Chief Executive Officer here at Brabo Payroll. We're a concierge payroll company that helps small and medium-sized companies up to 500 employees handle payroll, benefits, and human resources. For those of you that have been calling the big payroll companies and not getting return phone calls and not talking to employees working in the United States, just know that you deserve better. And if you Google Brabo Payroll, we would love an opportunity to help you out. So without further ado, I would like to introduce Dr. Robert Minetti.
Well, thank you very much. And we're going to do our webinar today on the PPP loans. And predominantly, I want to talk about what small business owners need to know. That's our topic. This is a rerun or built off of a NASBA CPE course I did, so that if those of you who are familiar with NASBA CPE guidelines, you'll see some of the same formatting that we use for that. Obviously, I want to introduce myself, Dr. Bob Minetti. I do have a doctorate in business administration. I am a certified public accountant, a certified fraud examiner, and as you can see, I've collected a number of other designations throughout my career as I've been moving through the field. Now I do want to make sure that we cover our objectives. Once you complete this class, you're going to be able to identify the requirements for the PPP loan and PPP loan forgiveness. Now, with that being said, I have to give you my disclaimer. It's obviously not possible to cover every aspect of the law and regulatory challenges because it's constantly changing. So that's one big thing that I've noticed. We don't have the final rules out yet, but we've seen the frequently asked questions and answers posted by the SBA and the Treasury Department, and those are changing on a daily basis. Okay, the final rules for the PPP haven't been released yet, but we're covering what from what's been put out by the SBA and Treasury, we're covering what we believe is going to be acceptable. And of course, it's subject to change. So this was updated on May 12th. And I do have another update that I'll give you during the webinar today that came out last night. So you can get that. Now, as I've done these webinars, and I did this one before, we had about 1,200 people on it and over 300 questions. So that tells you people are very interested in what's going on. One of the things we're finding is lenders have different interpretations. Because the final rules are out, some lenders are interpreting things differently. So one thing I advise everybody to do, if your lender says, we want to do it this way if you want forgiveness, remember that the lender, per the law, the lender's the one that's going to decide if you get forgiveness or not. So I'm always going to say, if your particular lender says do it something different than what I tell you, follow your lender's advice and keep backup that they told you to do it that way in case you're challenged. So with that disclaimer out of the way, let's go ahead and talk about the Paycheck Protection Program and what we need to know about it. So when we talk about the program, this was originally authorized to guarantee loans through June 30th. Well, we know that didn't work because we ran out of money in April. There's no way they had enough money. That $349,000 that they initially provided didn't cut it. That was all gone, and people got into the second wave. Congress reauthorized it. It was 300,000. I think it was actually 310,000, but it was just a little over 300,000 of additional funding. Now, one of the things that I want to talk about, and this is one of the changes that came out yesterday, was the certifications the borrowers need to make in order to be eligible for the different loans. And we had a PPP loan, which is the Paycheck Protection Program, and the EIDL. Sorry about that. emergency income disaster, no, economic injury disaster loan. Sorry about that. You know, when you get to be my age, you have that senior moment every once in a while, you know what I'm saying? And your brain just slips on you. It's going to happen. So when we look at this, again, we're talking about the concept of direct loans to small businesses, but they went through SBA lenders. Now, part of the problem they came out with is, well, the banks got all tied up. The big banks, what did they do? They started loaning to their biggest customers. You want the maximum, you know, $10, $20 million loan, then they were going to give you that. And they didn't concentrate on these smaller businesses. So a lot of small businesses were left out of the first round. Then we saw a lot of the fintech companies jump in. Some of those went in and authorized billions of dollars in loans. They took all these loan applications from the small businesses who didn't get in through their banks, and they went and got loan approvals for them, and they don't have the funding. So they're sitting on tons of approvals out there, and they don't have any money to fund them with. They're trying to borrow the money or find banks to fund the loans. So you may have gotten an approval. In some cases, I know of businesses that got approvals over a month ago, and they still haven't received any funds, even though the law requires the lenders to fund the loans within 10 days. Because they locked up the approvals, they can't apply somewhere else. You know, even though the law didn't limit you to one PPP loan, the SBA did. They basically said, because this is a short-term loan, it's only supposed to run through June, guess what? You know, we're only going to let you have one. So if you applied for one, you got an approval, they didn't fund it, if you apply again, they're going to kick it back and say you can't get the loan. So that's been one of the problems we've had with the PPP loans because of the lenders and some of the fintech companies who were great with technology, and their technology allowed them to process literally millions of small PPP loans for small businesses. They just didn't have the funds to fund the loans. And now those loans are sitting out there. They've been approved, but there's no money to give the businesses because the fintechs don't have the money. So when we talk about the requirements, we were looking at small businesses. And of course, the SBA says a small business has less than 500 employees. So, you know, there's still a lot of businesses that fell under that act. And what we found was there were a lot of companies that people kind of were surprised got the loans. There were a couple of them. I think it was Shake Shack. Ruth Chris Steakhouse was one. I think they got $20 million. And of course, I think the one that surprised everybody was the LA Lakers. I mean, seriously, they got a $6 million loan. That doesn't even cover the cost of a power forward for the season. So we know there was a lot of kickback on those. And everybody was saying, well, that doesn't seem fair that these big companies are getting $20 million and my small company that needs 150 grand can't get any money, and we're all tied up in the paperwork. Now, the other thing they opened this up to was 501c3 not-for-profits. They also opened it up to veterans organizations and tribal businesses. So a lot of the small, the Indian tribes. Of course, they did limit the amount of activity that can be done through gaming businesses. So for the Indian tribes, their non-gaming businesses are able to take the PPP loans, but the casinos are not. And I guess the thought process was there's plenty of money in the casinos, which was probably true right up to the point where they closed them all. Even the Vegas Strip is closed. Who would have thought that would ever happen? So we're seeing massive cash flow issues. Now, the other advantage of this is, sole proprietors, independent contractors, and people who are self-employed can apply for the PPP loan to make sure that they also can get paid during this. Now, the whole concept of this, if you go back and look at the congressional record, the purpose of offering the PPP program was to keep people off unemployment. The feds knew that the state unemployment systems couldn't handle the vast onslaught of new unemployment claims. I know several states are currently out there advertising They're trying to find COBOL programmers. Now, these are people who are retired in their 80s because they haven't taught COBOL since, you know, the 1970s or 1980s, but they're using old technology, 50-year-old technology to run their unemployment systems. You know, and they were averaging, a few hundred to a few thousand, depending on the state, new unemployment claims a month. Now, what are we seeing? 3 million unemployment claims per week, new claims on top of the old ones. You know, many states have massive backlogs. Plus, because of the changes in the unemployment rules, they've had to change the software because it wasn't designed to accept, gig workers, sole proprietors, independent contractors, which can now be covered by, unemployment. Now, one of the things I tell you when we talk about the PPP loan is don't try to double dip. One business owner I know, I've already told him not to do this because his plan is, well, I got my PPP loan, I got the cash for that, I paid myself for 8 weeks, then I laid myself off and I'm applying for unemployment. And my thought is don't do that, because if you get caught, and that's very likely to get caught, they're going to come after you because that's a flat out fraud. If you take your PPP loan, give yourself 8 weeks worth of salary up front, and the following week apply for unemployment because you laid yourself off from your C Corp, you're going to have a potential problem. And that one's going to be called fraud because, again, the big key is don't double dip. Now, when they opened this up to business, they also said, that we need to look at a number of, claims that you have to have. And the big one was the current economic uncertainty makes this loan request necessary. I actually copied the part from the loan application for you. So you have to make these certifications. Obviously that your business was working prior to February 15th, and other certifications. But the key one we've had to deal with, because of some of the big businesses like the Lakers and Ruth Chris, most of which have returned their loans. Though I understand Harvard University, even though they have a multi-billion-dollar endowment, they've kept their loan so far. They haven't returned it. But public pressure is out there to return some of these items. So basically they said, you need to make sure that you can certify that, you needed this money. Now, the SBA has also stated that, any business that has more than, $2 million in payroll, you're going to be audited to certify and prove that you met that economic uncertainty, which is going to mean you want to have notes that you calculated that you had a loss of business. Because of the uncertainty factor, I had a number of live seminars and conferences cancel on me this year. Obviously, we're not going to be doing a lot of live events, or any actually. I had all of them send me an email. I said, send me an email that you're canceling so I can prove it. I got a lot of airfare I purchased that I can document that the income was lost to prove it. Now, my loan's not going to be over $2 million, and we're lucky because last night the SBA came out with a new statement that, if you got a loan for less than $2 million, then you're not going to have to worry about it. They're going to assume that you had a economic necessity, and what they're going to say is that, it's likely that you have a safe harbor, and that it's likely that you needed the money. Now, there could be some areas where you still want to have that documentation. And of course, we're going to have to make sure if you got both the EIDL and the PPP loan, you need to document what that was spent on. That's a big issue because you can't double dip. You can't pay for, use both of them to pay the same expenses. So you can't pay your rent for June with the PPP loan and claim you paid your rent for June with the EIDL loan. I think we all understand that double dipping is never going to be acceptable. Now, we also have to remember that the IRS has determined that, even though the PPP program, that income, if it's forgiven, that will not be included as income for your business. So that isn't revenue. But currently, the IRS is stating that if you use the PPP loan to pay expenses, you won't be able to deduct those expenses on your taxes So it basically has the effect of including that in your income. You don't have to include the revenue, but you don't get to take the deductions. There is an act, a bill proposed in Congress that's going to change that. Congress is going to change the law, or has proposed to change the law to allow us to take those deductions. So that's something we have to look forward to. Now, one thing that they also looked at is what you can use the funds for. 75% of any amount that's forgiven has to have been used for payroll. That's to pay employees, to pay the owners of the business. 25% or up to 25% can be used to cover mortgages, rent, and utilities. So we need to be aware of that. Now the loan is nice because it's going to have a 6-month deferral period. And during that deferral period, we have the opportunity to request forgiveness. Now the key to remember is forgiveness isn't automatic. Now there's no collateral or personal guarantee. This is strictly a business loan. And a key thing, because I've seen websites out there where they're charging fees to help you file for your PPP loan, EIDL loan, nobody's supposed to charge fees. The government or lenders are not allowed to charge fees. The SBA is paying commissions to the banks. And guess what? That's why the banks concentrated on the big loans. What would you rather have? A 5% commission on a $20 million loan, you only had to process one loan package, or a 5% on, $2,000, $100,000 loans, and you have to process 2,000 loan packages. I think we understand why the banks concentrated on the bigger loans that increased the amount of money that they were going to get from the commissions. Even the AICPA has come out and stated that it's inappropriate for CPAs to charge for helping somebody fill out a PPP or EIDL loan application or helping them with the process.
Dr.
However, you can still charge for helping them to prepare their financial statements or getting their payroll records in order. If they're not using a third-party payroll processing company where everything's already done for you, if many companies who process themselves, somebody needs to go through and help them put all that together. We can charge for that work as CPAs. We just can't charge them to help them fill out the loan application.
Can I touch on something really quick for you?
Absolutely.
So one thing that we know also, there is the built-in commission for the banks, and there's also a built-in commission for agents that work to prepare the information for the banks. The banks are the ones that actually have to pay those individuals directly. So if it's prepared by a professional and they help you through the application process, there's a part of the CARES Act that allows for the bank to pay them without affecting the proceeds of your loan. So it's really not correct for people to be charging at all.
Well, no, what I was saying is that they shouldn't be charging the borrower at all. The borrower shouldn't be paying any fees.
Agreed. The bank does pay a preparer though. So
Yes, the bank can pay a preparer. That is correct. But the borrowers shouldn't have to pay any loan fees for this. And, there's no prepayment penalty if you want to pay it off early. Now, the thing is, the loan has a 2-year maturity. So it's going to get paid back pretty quick. But the nice part of it is it's got an interest rate of 1%. The government's got the interest rates down almost to 0 right now. I think it is at 0 for government borrowing. Now, when we talk about that, as I said, if you got over $2 million in your loan for payroll, you're going to have to substantiate this. It's an automatic audit. They're going to look at everybody who got more than $2 million. But the safe harbor for businesses under 2 million, I think is going to let a lot of the smaller businesses off the hook. Again, unless you're talking, and I've seen comments of this on different social media accounts, oh, wow, great, this is free money. I can give it all to myself. You post stuff like that, you can expect someone's going to come look at you. So be careful of what you're posting about and talking about, and make sure you've done some kind of documentation to show you we're really needing the money just in case. Now, when we talk about that, again, if you did get a large loan and you determine, well, we don't meet that economic necessity, we have the ability to pay it back. And I believe it's now been extended again to May 18th to do the full payback, so that for those big businesses, especially the public companies, when you've got $2 billion sitting in your bank accounts, you don't have an economic necessity for a payroll protection loan. And there's that opportunity for them to, pay that money back if they need to do so. So as I said, I designed this for, NASBA credit. So I will have the polling questions in. I'm just going to kind of roll through these. Now, one key thing to remember, when we're looking at the payroll protection plan, is you may need to submit documentation to establish eligibility. Remember, it's limited to 2 months, 2.5 times your monthly payroll. And you can base that, most people are basing that because they gave you the safe harbor of using your 2019 payroll, divide by 12 times 2.5. That's a really safe way to do it. So your maximum loan amount is 2.5 times payroll. So you need to get your payroll records, your tax filings, your 1099s. If you're a small business owner, your Schedule C, these are the things that you have to support the payroll. Now, one key thing I point out is the SBA advised lenders to maintain their documentation for 10 years for potential audits. So they're giving themselves a 10-year look back because of the huge volume of loans. And let's be honest, they announced that, the amount of loans the SBA has made, in the first 4.5 months of 2020 is more than they've made in the last 20 years combined. So, they are not used to this loan volume. They're giving themselves 10 years to go back and audit these loans. Did you supply appropriate information on your payroll so that the amount of the loan could be determined? Did you have other documentation? And when we're looking also at how you spent the money, did you keep documentation on how you spent that money? So we're advising anyone who got a PPP loan to keep their documentation for at least 10 years, after the program's over. So that's a big key thing here. You have the opportunity, you want to keep it for at least 10 years after you get your loan forgiveness, just in case there's a look back and they come back to see what you're doing. So if your normal records retention policy doesn't have you hold data for that long, you want to make sure you make an adjustment to your records retention policy for the PPP loan. Now, again, the key thing is also going to be for independent contractors, small business owners. You can't count independent contractors as your employees. So initially they said you could, and then they changed it because independent contractors can get their own PPP loan. So you don't count that as part of your employees. And they're able to use the income that was generated on their Schedule C. So they're going to look at the net income on the Schedule C, divide it by 12 and multiply it by 2.5, and that's the amount of money that a sole proprietor or independent contractor can get if they filed a Schedule C. The same rules apply for them. You still have that 2-year maturity date, and it's a 1% interest. Now, one of the things to remember that, the law didn't expressly state you could only have one loan, but the SBA said, we're looking at only, you got to have all the loans out the door by June 30th. So they limited it to one per borrower. And even at that, they have more loans than they're able to process. There's still tons of loans out there that haven't been processed. A lot of people got locked out when they ran out of money in the first round. There's still money there in the second round. So if you haven't applied yet, there's still an opportunity to do so. A lot of the bigger businesses didn't apply, and a lot of the big businesses that did get loans returned the money. And when they're kicking back, $20 million, $10 million, that can fund a lot of smaller $100,000 loans. And, the net size of the loans has gone down significantly in the second round from what was being put out the door in the first round. Now, we want to talk about what can get forgiven. And those are some of the key things. And you need documentation on this. And the final rules aren't out yet, but we really want to make sure that we're documenting as we go. Now, when we look at that, what can get forgiven? One is payroll costs, payments on interest and on your mortgage obligations, as long as that mortgage was in effect before February 15th, 2020. Rent payments on leases dated before February 15th, 2020. Now, here's the key thing where we're looking at some interpretation. Interest on mortgages is pretty straightforward. Rent payments on leases. Well, if you're a restaurant, you might be leasing kitchen equipment, ovens, stoves, etc. If you're a delivery company, you might be leasing delivery trucks. If you're a taxi driver, you might be leasing a taxi. So and I've talked to several attorneys who say the word lease means lease. It doesn't say, lease for real property. So the argument is if you have leases, you can use part of that 25% to cover rent payments on those leases that were in effect before February 15th, 2020. But for interest payments, if you bought your delivery vans, that interest is not deductible because interest on mortgages is the only thing that's deductible. And then utility payments, and I'll cover that in a minute, what they include in utility payments. But the service agreements for the utilities had to be in place before February 15th, 2020. Now, a common thing comes up is, well, what if we had a renewal? What if our lease ran out in March and we renewed? Well, if you renewed with the same landlord, the best thing I'd do is tell them, rather than a renewal, in order to make sure I can deduct this on my PPP, can I get a lease extension through June, and then we renew the lease in June?
What a great tip. That's huge.
Yeah, it does make a difference because it allows you to continue. An extension means you have the same lease that was in effect on February 15th. So now that extension gives you the ability to take a deduction. Whereas if you get if you move to a new office, you're out of luck. That's a new lease that was not in effect on February 15th. And that's the general consensus that we have on leases. And the same thing with utility payments. Don't change your cell phone carrier, your phone carrier, your internet carrier, until after June 30th. Even if you're thinking about changing, hang in there for a couple more months. But remember, only up to 25% can be for these non-payroll costs. 75% has to be for payroll. And you can't prepay expenses. So you can't prepay your phone bill, your leases, or anything for the rest of the year. It has to be expenses during the 8-week period. Now, I've been advising everybody to use the accrual method. Some people say, well, my business normally uses the cash method. Fine, you don't have to change the way you account for your business, but you want to use the accrual method to account for the expenses, the money you're using from the PPP loan. Some people are even advising, especially if you have a larger PPP loan amount, that you get a separate bank account to segregate it from your general funds so you can prove what you use the money for. And the key thing is, why accrual basis? Well, the final rules aren't out, but the accrual basis is the easiest one to argue. It's GAAP. FASB approves it. We know that that's the way that the government prefers us to do things. Even the IRS prefers the accrual method. They'll accept businesses on cash basis, assuming you're small enough and your revenue's low enough, but they definitely prefer the accrual method. All public companies are required by law to use the accrual method. So it's the easiest one to argue. And remember, our basis is, how do we make sure, that we get out there? Now, one thing I've heard is, well, what happens if we're just coming short on that 75% threshold? Well, the argument is, remember, it says payroll includes commissions, tips. We can assume that payroll also includes bonuses. So if you need to make some small bonuses to your employees, hey, they were working overtime, or we were giving them hazard pay for coming into the office, We were, paying them a little bit of extra money because of, maybe throw some overtime in there if they're hourly workers. Pay them for a few hours of overtime and, say, okay, charge us for 4 hours overtime and you don't have to work it. It's kind of a bonus, but be careful here. Don't give out huge bonuses to the owners and executives of the business and nothing to the employees, or I can almost guarantee that's going to be a red flag. Suddenly the business owners and executives are all getting bonuses and the employees are all getting laid off. It's an issue. Remember, no employee who makes less than $100,000 a year can have their salary or wages reduced by more than 25%. Now, if you got somebody making 300 grand a year, you can reduce their wages by more than 25%, but for those making under, $100,000 a year, we can't cut them down too low. We still got to pay them. We need to maintain that level. Now, the SBA defines utilities as phone, interest, electricity, gas, water, etc., which isn't really well defined. I've also seen in some of the conversations transportation, which also isn't defined. But utilities, your phone bills, that would include your landlines, your voice over internet phones, and your cell phones. Internet is your internet service providers that you have. Electricity, gas, and water, well, those are self-explanatory. Now, remember, all of these had to be in place prior to February 15th. Now, if you're a self-employed borrower, you can only make these deductions if you had them on your 2018, 2019 tax returns. If you didn't deduct these expenses, if you didn't take the home office deduction and have these expenses on your previous tax returns, you're not going to be able to suddenly come up with deductions for these expenses this year. You got to show that you've consistently deducted them in the past. That's one key that they've definitely pointed out. Now, remember, you're going to have 8 weeks for the use of these funds. So once you get the disbursement, that 8 weeks starts. You've got to pay this out within 8 weeks. Now, as I said, the disbursement is supposed to occur, no later than 10 calendar days from the date of approval. But we know for a fact that we have some approvals out there that have been sitting out there for more than 30 days and they haven't been funded yet. The approvals are locked up with the SBA and the businesses are still waiting for their money. So obviously there have been many issues there. Another reason for keeping close documentation, if you didn't get your funds within the 10 days, you're going to have an opportunity to litigate against the lender. If they got an SBA approval number and didn't fund it within 10 days, you've got the opportunity to show, oh, I kept all my documentation. Here's my loan app. Here's my approval. Here's when I finally got funded. My business suffered irreparable harm because I didn't get that loan in time. Bam, now we're looking at a lawsuit. I'm a forensic accountant, so I'm always thinking about where are we looking for the money and how do we recover damages? So you have to understand that. We still got to bring the attorneys in to do the work, but we're always looking at those cases. So we want to make sure we document this. If you didn't get your loan money in 10 days, keep it documented. And remember, 10 days from approval, not 10 days from application.
Just Dr. Benetti, right before we kick into this poll question, I have a couple questions that I wanted to ask really quick. First thing is regarding the expenses, and I know that you said accrual based, and a lot of our clients, I think, are cash based and looking to be that way. But do you think that they talk about the amounts owed being incurred and paid within the 8-week period? Is that inclusive language, meaning either or? I know they didn't use the word or, they said and. So does the bill have to be, you know what I'm saying there? Like
I do, and that's one of the areas where we're waiting for that final guidance.
Okay.
One of the reasons I said that we may have to argue, incurred and paid, is open to interpretation. So the big thing is if you're using the accrual basis, which is GAAP, which is approved by FASB, I'm saying, hey, that's a better safe harbor than a cash basis. The other reason for using the accrual basis, it's harder to argue, oh, you paid something that happened prior to your getting the funds. Oh, I paid a bill 3 days after I got my loan disbursement. And then they're going to claim, well, most of that bill was from prior to that, so you can't get forgiveness on it. Or I paid a bill 3 days before the end and it's a forward bill, like your phone bill, you pay in advance, so they could cut some of that off. So if you look at the accrual basis, you can say, these are the expenses that accrued during that period. Now I can show that they were all paid. And I obviously recommend paying the bills as quickly as possible as soon as you get the invoices.
Awesome. My other question is, are we going to have time for a Q&A at the end? Should I hold all of these questions, or do you want me to?
We will have time for Q&A, yes.
Okay, I'll hold it.
I mean, you know, I'll make sure we've got time for it. You know, I've got another webinar in a couple hours, so I can't stay all day, but I can stay for a little while.
All right, let me launch this poll for you right now. So everybody, we're going to do a poll question. You're going to see something pop up, true or false. So launching the polling now. We'll give it just under a minute. Borrowers must use the funds within 8 weeks of the loan disbursement. True or false? Borrowers must use the funds within 8 weeks of the loan disbursement. Got quite a few votes. We've got 84 people have voted out of the 136 here. 88 people are still voting. True or false? Borrowers must use the funds within 8 weeks of the loan disbursement. All right, so I'm going to end it now. And we had 89 people said true, 3 people said false. I love your question.
But the answer is true, so remember that.
Yep.
For those 3 that said false, you do have to use it within 8 weeks. Now, the AICPA and other groups have petitioned Congress to change that, but currently it has not been changed. And the argument is, you know, if we're still required, you know, if we're required to be shut down by the state, how can we pay payroll unless we're paying people to stay home?
Dr. Minetti,
so there is some argument on it, but the law is still 8 weeks.
Right. So my question is that only for the forgivable portion though?
That's only for the well, no, that's for the anything you want forgiven. If you have money left at the end of 8 weeks, you don't get forgiveness. You pay it back over the next 2 years at 1% interest.
Excellent.
Now, I've had a lot of questions as to, you know, gee, what's included in payroll costs? And of course, that's salary, wages, commissions, tips, you know, and your salary and wages can include bonuses, overtime, etc. You know, but it's capped at $100,000 on an annualized basis. And I've seen both arguments. Well, for how do we figure out the 8 weeks? Do we take, you know, 100,000, you know, divided by 52 times 8, or do we use what we had to do, what the SBA said to do for small businesses? We take the annual payroll of 100,000, you know, we divide it by 12 times 2. And if you notice, you're going to come up with a different amount if you do that. And the answer is we don't know at this point. So, you know, whichever way you use, just make sure you document your calculations. Now, remember, this also includes paying costs for vacations, parental leave, family medical leave, sick leave, separation allowances. If you let an employee go and you give them a severance package for dismissal, you know, also paying for group healthcare benefit, insurance premiums, and retirement benefits. Now, some questions that have come up as well, you know, what happens if we take the whole thing and, you know, put it all in as, you know, 401k retirement benefits? Well, I don't think so. Once again, I think you got to look at what have you put in for retirement benefits as a percentage of payroll over the last 2 years, and then on the accrual basis, how much of that would accrue during the 8 weeks that you have to disperse the funds. You know, then you can go ahead and use that. But you know, I've had people say, well, you know, I'm self-employed. What if I take the whole amount and put it in my, you know, self-employment KEO fund and I don't pay my employees? Well, I think that would be a red flag. So we got to be careful on a couple of those issues. Now, remember, you can't double dip on that sick leave. So if they've got the 2-week sick leave that were part of the stimulus packages that are paid for with tax breaks, you can't you can't get the tax break and use the PPP funds to pay for the same sick leave. That's double dipping, and I guarantee double dipping is one of the things they're looking at. Now, you can also include state and local taxes assessed on on the compensation, and the SBA and Treasury's Q&A says that you can take the employee side of the payroll taxes, but not the employer side. So it's on gross wages. So the employee side of the payroll taxes can be paid with the PPP funds, but the employer side cannot be paid from loan funds. Now, for sole proprietors or independent contractors, you're basically looking at net earnings from self-employment. Because you don't actually, if you're self-employed, you can't give yourself a paycheck. It just comes out of the business straight up as net earnings. Now, the $100,000 exclusion only applies to cash compensation, not non-cash benefits, like employer contributions to a defined benefit or to a defined contribution plan, or group health care, and those state and local taxes. Now, another interesting thing that came into the Q&A was a housing allowance or stipend can be included in payroll costs. Got a lot of questions from this from the charities, the 401c3s, especially a lot of religious organizations give a housing allowance to the pastors and the people working at the church. And, that housing allowance can be included in payroll. So, again, the key is that if they did take time off work, sick time for the Families First Coronavirus Response Act, you can't double dip on that, as I said previously. Sorry, I'd forgotten to move the slide forward. That happens sometimes. I'll make sure you had a chance to look at that one. Now, let's say, you don't use it all. You don't get it all spent in that 8 weeks, or you're going to have some of that you're going to have to pay back over a 2-year period at 1% interest. Luckily, the interest rate is very low. What's going to happen? Well, you didn't pay enough in payroll. Let's say you only paid 70%. Well, you're not going to get full forgiveness. The nice thing is they said you can get partial forgiveness. So if you don't spend it all, let's say you spend, 73% on payroll by the time the calculations are done, you can get a partial forgiveness for the 73% of the loan amount, and you may have to pay the rest back or part of it back, depending on what you spent the other 25% on. Now, big thing is, the loan forgiveness is going to be reduced if you decrease your full-time employee headcount. That FTE is very important. And also, if you reduce salaries and wages by more than 25% for any employee who made less than $100,000 in 2019. But you've got until June 30th to restore your full-time employment and salary levels, even if you spent all the money before June 30th. So there's a little catch there. This is why, the AICPA and some other groups have argued that we need a little more clarification on this. One nice thing that came out, if an employee was laid off, furloughed, let go, you offer to bring them back in writing and they don't come. Why are we seeing that? Because I'm going to be honest with you. Talked to numerous business owners, said I tried to bring employees back once I got my PPP loan, and they told me, heck no, I'm making more on unemployment than what you're willing to pay me. I'm not coming back to work. As long as you made the offer to them in writing and they turned you down, that won't affect your loan forgiveness for the PPP loan. You made a good faith attempt to bring them back and they say no. You might want to remind the employee that if they reject your offer of reemployment, it could cause them to lose their eligibility for unemployment from the state because they got a job offer. And that automatically, they should have taken their job back if they were laid off. So we want to make sure we're looking at those full-time equivalents, and understand that once the loan is paid out, the lender, you got to make a request to the lender for forgiveness. No forms or documents have yet been published that I've seen to apply for forgiveness. I think each lender is kind of on their own for it. but the lender has 60 days to make a decision on forgiveness once you apply for it. So that's one of the things that you want to make sure that you consider. Now, if you use those funds for unauthorized purposes, you go out and buy a new car, a new delivery van, a new office building, whatever, the SBA is going to tell you you have to pay the money back. And if you knowingly use the funds for authorized purposes, you're subject to a federal charge for fraud, which means this is a federal crime because it's federal funds. It's coming from the government. They back the loan. So that's a big key thing. And it also applies if you're a shareholder, member, or partner, that sole and separate liability. If you got 5 partners and one of them goes out, takes money out of the PPP funds, buys himself a new car, guess what? All the partners are on the hook for it. That unauthorized use applies to everybody. Now, understand, we've talked about some of the rule changes. That's because the law gives the Secretary of Treasury and the SBA the right to put in the loans and look at different things, and also grant de minimis exceptions from the loan limits, and extend things. So a lot of this is going to be working with how the SBA and Treasury Department in their final rules interpret it. And once the final rules are out, we'll update this and come back and give you some more information. So I want to make sure everybody knows is this isn't a one-time deal. We're going to be able to come back and give you what all those final rules are. And again, the key thing, as I said, with the payroll costs, it's gross payroll. So let's say you have an employee who makes $4,000 a month in wages and $500 in taxes are withheld. That would count as $4,000 in payroll costs. So those state and local taxes, the employee payroll taxes, those still count as payroll. The one part that doesn't count is, the part that the employer pays for the employer half of the payroll taxes. Those taxes don't count as part of your payroll. Now, what documents are you going to need for forgiveness? Big time, you need to have documents verifying the number of full-time employees on payroll and their pay rates, and you're going to have to do a look back. They're going to look at, well, how many employees did you have on, February 15th? What were your full-time equivalents for this time last year, especially if you're a seasonal company? They're going to go back and look at, well, how many employees did you have in 2019, full-time equivalents? How many did you have for that 8-week period in 2020? You're going to need to give the payroll reports from your payroll provider and your 941 tax filings. Any payroll or unemployment insurance filings from your state that you might have. This is for the gig workers and the people who are self-employed that maybe applied for both the PPP and the unemployment. Any retirement and health contributions, they're going to want to see what you put into it. And trying to fund your entire retirement plan for the year during that 8-week period, we're looking at that as a potential red flag. Obviously, any non-payroll expenses, that interest on mortgages, your rental payments, utility payments, you're going to be looking at canceled checks, payment receipts, account statements, invoices. And I'm telling everybody, if you're a sole proprietorship or owner partner, you want to write those checks for owner's compensation so that you can show, yes, I have a canceled check that was written for owner's compensation. This was money that the owner was given to compensate them for services provided to the business. This is why the one gentleman I told you about before, I said, you don't give yourself, 8 weeks worth of salary and lay yourself off and collect unemployment over the same period of time. They're going to come back and check these things. The fraud is the big thing they're looking at. I've already seen numerous instances where the FBI has gone after people for fraud. People have been arrested for filing for PPP loans for businesses that weren't in existence on February 15th, for inflating employee amounts or FTE amounts, for inflating payroll amounts, etc. Now, if you made a good faith mistake, they're going to fix it and they're going to let you move forward. But if they can prove you did it on purpose or that they have a reason to believe fraud was involved, they're going to come after you. I'm just being honest with you on that one. Key thing I mentioned before, the IRS has claimed that any expenses paid with PPP funds are not deductible on your tax return for 2020. This is subject to change, and there's already a bill in Congress that's been sponsored to change this. Again, with the partisan politics, who knows what's going to happen there? Don't count on it until you actually know that the bill has been passed. All right, let's throw out another polling question.
I've launched the poll. I apologize. This is true or
This
false.
is the third one.
All right, so wrong one. I apologize. So third one. Launching polling now. So true or false, the IRS has ruled that expenses paid with funds from the PPP loans are non-deductible. We've got 13 voting, 25 voting. Wow, you guys are moving fast.
Yeah, actually, the IRS had no choice in that. There's actually a law in place that says that money coming from non-taxable sources, you can't deduct expenses if you paid those expenses with non-taxable income. So the IRS's hands are tied unless Congress changes it. Only Congress can make this change. So you can't complain about the IRS on that one.
So most people did pretty well. So we had 76 people said true, 10 people said false.
So I want to take just a couple minutes and talk about the economic injury disaster loan, because a lot of companies got both. Let's be honest, everybody went and applied, especially for the, that grant on the EIDL. Up to first of all, it was supposed to be $10,000, and then they changed it to up to $10,000, and then the SBA limited it by the number of employees for the grant. The grant doesn't have to be paid as long as you use it for paying approved expenses.
We want to move the slide forward.
Oh, I'm sorry.
All right. Yep, there you go.
I know this stuff and I'm just going off the top of my head, so you got to forgive me.
Thanks for doing it.
So the grant doesn't have to be paid as long as you use it for acceptable purposes. And of course the grant was supposed to be available within 3 days of applying for it. Well, we all know that never happened. If you did get the grant, you didn't get it within 3 days. They're still in the process of processing these loans. Now, right now, one of the things to remember, in the original round, agricultural companies could not apply for the EIDL loan. In the subsequent round, they allowed them to apply, so the SBA has temporarily limited the application of EIDL loans to agricultural companies. Dairy farms, farmers, etc., people who are producing food. So that's a key thing to remember. And we expect that at some point they're going to open it back up to everybody again. So that should be hopefully happening. But right now we're still limited to those agricultural companies who were blocked out in the first round. Now, what can you use the EIDL loan? Well, we can use it to pay sick leave for employees who got sick, as long as they weren't covered under, other tax breaks for the sick leave. You can use it for payroll from business interruptions or business slowdowns, supply chain interruptions. This is the big thing. You cannot use the PPP loan. Let's say you're a restaurant and you close down for 2 months because your state required you to close. The PPP loan can only be used to cover payroll. Well, how much of your fresh fruits and vegetables are going to be good after they've been sitting on the shelf for 2 months? Please don't serve them to me if you're a restaurant. You know what I'm saying? They got to throw all that food out. The milk, the cheese, the meat, the vegetables, all of that nice fresh food. Now, I'm not saying they throw it away. Luckily, most restaurants, being very conscious about their communities, donated it to food kitchens. And I've seen the videos on TV where, literally half a mile long lines at the food banks, people trying to get stuff. So, the EIDL loan can be used to restock your kitchen. restock your supplies, get your inventory back in place. You can also use it for rent and mortgage payments and repaying obligations, like accounts payable that you couldn't meet due to revenue losses. So if you had a bunch of accounts payable out there, you can use the EIDL loan to pay your AP. Can't use the PPP for that. This is one of the reasons for a lot of small businesses that you want to apply for both. Now also remember, and I've done a whole nother webinar on this, but if you have a catastrophe loss, because this is a presidential declared national disaster, if you have a permanent loss in the value of your business, you're going to have the opportunity to file a casualty loss on your taxes. That'll be for the owner of the business. Let's say you had a restaurant, you had 100 tables. Under the new rules, when we open back up, the state's only going to let you have 50 tables. That could result in a long-term reduction in the value of your business, a permanent reduction that would be a casualty loss because of the virus. But if you have a net operating loss, the nice thing is you'll be able to carry it back 5 years or carry it back or carry it forward indefinitely. They changed the rules that were changed in 2017, with the last tax act. So one key thing to remember, don't double dip. I can't say this too many times. Whatever you use the EIDL loan for, you cannot do the PPP loan. So since the PPP loan is more restrictive, 8 weeks, the EIDL does not have that 8-week limit. Pay the stuff the PPP loan can pay out of the PPP first, and use the EIDL loans after that to cover things that weren't covered by the PPP.
I want to give you something interesting. So I had gotten my PPP before I got my EIDL, and my loan officer and the attorney at the SBA actually required a loan modification. And they had asked me about my intention of using the PPP funds. And they said if I was only going to use it for payroll, I didn't need to do anything. If I was going to use it for payroll, rent, and utilities, they would have to make a loan modification. So I did actually have them make that modification to my EIDL. I'm not clear whether more guidance will come down the pipe, but that came directly from the SBA for me, that they put in a loan modification to say that I was able to use my PPP for rent and utilities, which I thought was really interesting.
Well, I mean, if you get a modification from the SBA, again, as we're saying, we're doing this as we go along. And we're giving you information as we find out about it. So I do want to give you that last polling question, then we're going to open it up to questions.
True or false? EIDL loans are currently limited to agricultural companies. True or false? EIDL loans are currently limited to agricultural companies.
And I should make sure I rephrase that. It's application for new EIDL grants and loans. If you were already in the pipeline, they're being processed in the order in which the SBA received them. So if you got your EIDL loan in before they limited new applications to agricultural companies, you will be processed in the order that your loan was received.
All right, so we've got 81 people voting, ending it now. Here's our results.
Again, that one I'm okay with. We have some mixed results because the specifics have changed since I first wrote that question, so I want to make sure that I explained it.
Awesome. Yeah, I think that makes sense.
Now I want to open it up for questions.
All right, I have a ton of them. We have, it looks like 31 open questions. I'll try to go to the most relevant ones and we can move quickly. So this one I thought was interesting and really, it says answer live here. So I neglected to include my salary in the numbers I submitted to the SBA as I misread the in excess of $100,000 salary rule. I didn't know if I could decline the loan, so I accepted it, but I haven't used it. Can I send back the money and reapply, or should I just take what I got, which is 4 weeks of payroll? Will I get forgiveness because I can only pay 4, not 8 weeks of payroll? So I think he's saying that he applied potentially under false pretense by accident.
Well, it's not false pretense, it's an error. People make mistakes. false pretense implies fraud. Honest mistakes are okay. I'm going to be honest with you. I would not give the money back and reapply because, by the time you get the money back and the SBA is able to get their ancient computers, and their computers were built, I believe, somewhere in the 70s. So they're not much better than the IRS computers, which were built in the 60s. All the money may be gone, or it may be past June 30th before you can get reapproved, where they clear your company out of the list so that you can get a new loan. We don't know how long the process is going to be if you give the money back to give you eligibility again. Since you can only get one, I'd say, spend what you got, and, yeah, you made a mistake. We've all done that in our life, but at least you got a little bit.
All right, next question. We have quite a few. So Ron Rice, who's also a CPA, do Schedule C with no employees need to write a check to themselves for 8 out of the 52 weeks of their 2019 line 31 schedule? Does the owner lose any expenses because of the forgiveness? And I think you touched on that. Right now, they're going to lose the expenses that are covered, right? But maybe that'll be changed.
Well, they won't lose the expenses if they, took the home mortgage, or if they had rent. Let's say you have an executive suite that you're paying rent for. Obviously you can show you paid those in your last tax return, so it'll be okay. As a business owner, 100% owner of my LLC, I'm writing checks to myself that says owner's compensation. And that's what I'm advising everybody to do. So there's absolutely no doubt that money was intended to the owner for compensation of services. That canceled check is contemporaneous proof of what you spent the money on.
Excellent.
Maybe that's overly cautious, but since the final rules aren't written, caution is a good thing.
I'll keep the questions moving. As an independent contractor filing and using these funds to provide income for myself, do I need to show movement of money with my bank account? An example so I think you just answered that. I think that's the same thing that you just answered. Quickly, can we touch on retirement benefits? Did we already touch on that?
Retirement benefits can be paid, and I recommend using the accrual basis based on the percentages of payroll you paid for retirement benefits in previous years. Don't come in and try to use the whole PPP loan to fund your personal 401, self-employed KEO plan, because that's going to be a red flag.
Okay. Does it count if I hire new people? If I only bring back full-time people who are collecting and not part-time people who are not collecting? What happens if my employees who are too nervous to come back to work? I wouldn't mind answering this one through the PPP FAQ. Question number 40 addresses that if you invite people to come back to work and you have it in writing, your forgiveness will not be reduced by that employee as long as you can document it. I would say that it's equally an HR question. So if you're bringing back new people and the only people that you don't bring back to work are old or young or men or women, you could be looking at discrimination problems beyond PPP forgiveness. So it's a two-part thing to consider. PPP forgiveness might go through. However, you could be shown to be discriminating against bringing back employees. So it's really important for you to consider what order you bring back people in and make it performance-based. Do you have anything?
Another big question I get a lot of is, what if I would need to terminate an employee for cause? Can I can I hire someone else? So you can still terminate an employee for cause, hire a new employee, and count that new employee's time towards your FTEs. Because there's nothing in the act that says that, if you have, you catch an employee embezzling, or, they're rude to a customer or do something, you can still fire people for cause and replace them, and that replacement will count towards your FTEs.
Yep. I just want to touch on this, guys. I keep on getting questions in the Zoom chat. Don't put questions there because I'm not going to read them. Go to the Q&A section at the bottom of the page so I can go in order. Next question is, first of all, thank you so much for providing this seminar. I am a partner on an LLP based in Boston, but I live in Germany. Can I still pay myself based on my 2019 K-1?
No, you must be living in the United States. The employees who count for the PPP program must be living within the United States.
Great. Thank you so much. Hold on, I'm just going to type that just in case you didn't get it. Can I pay health insurance premium for myself, self-employed, no employees?
That one is up in the air. It says you can pay group health insurance, but they didn't make any qualifications about self-employed health insurance. We're waiting for the final rules to come out and hope that they address that.
Okay. So dismissing. I've read that for sole prop schedule.
Oh, you can pay it out of the EIDL though. You may not be able to pay it out of the PPP, but if you get both, you can pay the self-employed health insurance out of the EIDL.
It just wouldn't be a forgiven amount. It would be a
Correct.
amount. So I actually have a question that I'd like to bring up really quick, because I know that in the EIDL, you cannot use the funds for expansion and other purposes. As an example, it's really just to cover business operations. Would it be incorrect to think that once you run through the PPP funds, then you can direct payroll to run out of the EIDL as well as other expenses, which would result in your operating account, if you still have receivables coming in, getting larger? Are you only limited in using the EIDL funds while they're available? So if you were to silo those and put them in a separate bank account and use them until they were exhausted, could you then operate your business as normal after that?
Yes, and what I said, again, that health employment, that self-employed health employment. If you're self-employed with 10 employees, you would have gotten that advance grant for $10,000. That is forgivable, and you can use that for your health insurance. So, if any part of the EIDL you got as a grant, you can use for the intended purposes, and you don't have to pay that back. But if you then go and get the additional EIDL loan on top of the grant, that part, you do have to repay.
Right, and the grant it comes out of PPP Forgiveness, from my understanding. Is that correct? So if you got a
if you got the EIDL before you applied for the PPP, you were supposed to include that, and they would add it on to the PPP loan. But if you got the EIDL grant after the PPP, then it's separate.
Yeah, my thought, and from what I've heard, and again, we can't wait for these final rules to come out. I think they're going to be reducing PPP Forgiveness based on the advance, because that would be double dipping, I think. Maybe I'm wrong.
No, that the way it reads is actually you get the 2.5% of payroll plus whatever you got in the EIDL. And then the purpose of that was to keep you from double dipping on the EIDL.
So I've read that for sole prop Schedule C filers, that the payroll portion, 75%, will be automatically forgiven as self-employment replacement income based on the amount on the Schedule C provided as verification during the loan application. And the remaining 25% is the only portion that needs to be spent to be forgiven. Is that true?
Up to 25% can be spent on the approved expenses I talked about. Now, the 75%, again, I am suggesting that small business owners, self-employed, Schedule C, write yourself a check for owner's compensation and specifically put the dates on the check for that compensation. That way, we don't know what the lenders are going to do yet, because the final rules aren't out. So, don't just take a cash withdrawal out of the ATM and pay yourself. Document, just like we would with any just pretend like you think the IRS is going to come audit you. If the SBA decides to audit you, where's your documentation? Better safe than sorry.
Software programs, as far as like Zoom and some of these other programs, like for example, we use Zendesk as a ticketing software, and that's how people call us. It's our phone system. Would that be considered a utility?
You could argue that. It doesn't specifically give us guidance on that. It does say phone services. So, I mean, if you're using that as a phone service or it's an internet service, there is arguments there. That's not, as I said, it's not specifically designed of what is and is not. And the lenders will make up their mind on that.
Yeah, last thing to consider on the same kind of path is email. So is email a utility in 2020?
Once again, same answer. It's not been defined yet.
I only have 2 full-time employees. One of them is myself as an owner of a C Corp. We are both currently on unemployment. What happens if my other employee does not want to come back? I think that goes to question 40. If you can get that in writing, then you would not have to have them count against you in forgiveness. Do you have a different thought, Dr. Minetti?
Well, the key I got there is you're counting on unemployment. Remember, you can't get the PPP loan and apply for unemployment for the same 8-week period. Yep. So if you get the PPP loan to pay you and your one employee, you cannot turn around and go get unemployment. Now, if you laid the employee off and they're getting unemployment and they don't want to come back, as long as you made them, as was indicated, an offer in writing that they declined, that can still be forgiven.
Self-employed. Is self-employed health insurance considered payroll? Is your SEP contribution considered payroll?
Again, that hasn't been defined by Treasury or the SBA. The self-employed, as I mentioned, could be paid out of the EIDL advance.
If an employee makes $100,000 plus, can a bonus payment be counted towards PPP forgiveness? I would say any wages in excess of $100,000 prorated cannot be. However, benefits that are in addition to $100,000 in direct compensation could be, like 401k employer match. Does that sound right to you, Dr. Minetti?
Yeah, as long as you can document that you're paying the same amounts you paid in previous years. You can't suddenly, make a huge, oh, we're going to give you, $50,000 in your 401k match when you've never done it before.
I'm just going to say this again, guys. Stop sending questions in the webinar chat field. I'm only answering questions under the questions and answers section. I know I keep spamming that. So I'm going to dismiss this. I have a question about the $100,000 to consider. I know that they've said prorated. Do you think that we're going to look at the 8-week window as a whole, or any pay period that goes in excess of 1,923 in a week? Those wages for that single pay period would be excluded.
I'm thinking they're looking at the 8-week as a whole, because, again, there's the opportunity for vacations. What if somebody, is an hourly employee working staggered, 3-4 work weeks and things like that. Where you work 3 days, get 4 days off, and then work 4 days and get 3 days off. A lot of people in the healthcare industry work like that. I know that because my son's works at a nursing home in healthcare. He's a CNA, and he has those kind of staggered shifts. So you got to look at that. The key is, again, look at the accrual basis. Yeah. I think that's the safest way to document expenses.
Yep. So confirming if it's okay to pay staff to stay at home while we wait for the business to be fully operational. Is it okay to pay staff to be at home?
Yes.
Yes. Great.
As long as you pay them.
Yeah. One of my big multi-location restaurant clients, SBA Debt Relief, which is part of the PPP. The SBA pays 6 months of 7A, 504, and microloans for qualified SBA borrowers. How do the payments get initiated? Do the borrowers have to connect their lenders, or do the lenders have to handle that automatically? So it's part of the CARES Act. It's not part of the PPP. And I've seen it both ways. I've contacted lenders. I've seen my clients contacting lenders, and I've actually seen some lenders auto-initiating those 6 months of loan payments. They're also, that program is available for new loans closing between now and September 27th as well. Do you have anything to add, Dr. Minetti?
No, it is part of the CARES Act. It's not part of the PPP loan. You can't use PPP funds to pay that, but there are deferrals available through the SBA if you already had an SBA loan.
All right, next question is, if our pay period started before the disbursement of PPP funds, but the pay date is later, do we have to prorate the pay period, or does the whole pay period count towards the forgiveness because we paid it after disbursement? Again, I know that Dr. Minetti is really hammering home the concept of accrual-based. I am very cautious on how we're going to handle payroll, whether it's cash-based or accrual-based, whether it's pay period-driven, or if it's when the weeks were worked. I think within the next 24 hours, 48 hours, we're hoping to have some better guidance on that. Dr. Minetti, do you think it's time for us to make a definitive answer on how we're going to quantify payroll in an 8-week window?
Well, I'm not going to make a definitive answer until the SBA and Treasury Department put out the final rules, because, again, you got a bunch of politicians who aren't accountants making the rules. So what they're going to come up with, we don't know for sure, but I'm trying to find things that are defensible. Obviously, if you absolutely want to stick with the cash basis, and when you're going to get your disbursement, you can, run payroll the day before the disbursement, a partial payroll, and then run a partial payroll during the period. At the end of the 8 weeks, you can run a partial payroll. That seems like an awful lot of work for your payroll processor. Whereas the accrual basis, and most of your payroll processors will be able to calculate for you, hey, here's my 8-week period. I got my disbursement. How much payroll on the accrual method occurred during that 8 weeks. And I guarantee your payroll processor can give you that information.
Yeah, but
I'm sure you'll back me up on that one.
yeah, it would be challenging. I'll say that small companies using ADP or Paychecks or any of the big ones, I apologize for even naming names, but the small platforms that you might use like Core Payroll or ADP Run are going to have a really hard time of doing accrual base, especially if you're not using their time and attendance, because most of you are calling in your pay period as a whole, not by the day. So you would need to tell them how many days to split out and run a mock payroll to see what portion that would have counted as. It can be done, but if you're not working with a proficient team, it can be extremely challenging. So again, it might be good to work with your CPA, your bookkeeper, or if you work with Brabo, we can obviously help you figure that out. Does this only count for full-time employees? Do we need to hire back part-time employees? So as far as the full-time equivalent calculation goes, anybody that's regularly scheduled to work 30 or more hours in a given week would count as a full-time employee. You want to look at a monthly report for the covered periods and figure out how many full-time employees you have, deduct their total hours out of the total hours worked for the month, and divide the remaining pool, which is only your part-time workers' hours, by 120 in a month to find the full-time equivalents for that month. Then you want to add up all your full-time equivalents and full-time employees by month for the period that you're looking at, whether it's February to June or January and February of this year, depending on how you're going to quantify your FTE. But you need to get back to your FTE numbers to not have your forgiveness reduced. So you might hire one full-timer in place of 3 part-timers, but you do need to get back to your FTE to have full forgiveness. Did I miss anything, Dr. Minetti?
Well, and it could be the other way. You could hire multiple part-timers to replace a full-timer.
Correct. All right. If somebody is self-employed, therefore using the funds for income, do they need to show that they use the money that they received? So I think Eric, he's touched on that several times. The recommendation is that if you're self-employed, to write yourself checks, even though you've never done that in the past, just as a receipt, so that you can prove that for your self-employment, you paid yourself. I don't know if this was answered before. How about for LLP with 2 employees with W-2 and partners with K-1, where they pay themselves withdrawals? How should we consider payroll costs and the forgiveness? The W-2, pay them as normal. For the partners, cut yourselves checks or have a receipt for the draws.
Just put partner compensation on the check.
Right in the memo. Do they specify the amount that won't be forgiven per FTE that's missing? AKA, if they had 27 FTE, but they now have 25 FTE, is it just their salary that's not forgiven or a set amount? So if it was the example that you gave here, Laura, 27 FTE and you went down to 25, because you'd still be bringing back 75% of your FTE, your forgiveness should not be reduced. However, Dr. Minetti, is there a formula to calculate how your forgiveness would be reduced if you go below that 75% returning employee threshold?
Not yet, because that's been left up to the lenders, and I haven't seen any of the lenders publish it yet.
Okay. Does a mileage reimbursement count as part of gross wages?
If it's a the safe harbor, I'm arguing for any type of reimbursements. If you include it in the W-2, it's probably safe to include it as payroll. If it's not on their W-2, it's questionable.
All right. So apologies if I missed this earlier. My PPP money was funded into my primary business account. Should I have created a separate account solely for PPP? If so, would it behoove me to create a new account and move the PPP funds?
The answer is not necessarily if you're able to track it. And for smaller businesses where your, PPP might have been 100, 150,000, you don't need to set up a separate, you're going to be able to track it. The ones we're talking about, especially where they should set up a separate account, is those businesses getting more than the 2 million, because you need to track what you spent that money on.
I'm an independent contractor. I have my own truck. Can I use the 25% for maintenance and repair of the truck and to cover diesel cost?
No.
Nope. Excellent.
Nope, but you can use it for lease payments if you're leasing the truck.
Steve asked if we were giving CPEs to CPAs, and unfortunately, even though this demonstration was CPE worthy and other CPAs did get credits, today we did not get that paperwork done in time, so unfortunately we'll not be able to give you CPEs. We are going to partner up with Dr. Minetti in the future, and I will do my best to get CPE credits available for the next webinar. I apologize. Laura is asking, can you clarify full-time equivalent for those of us with part-time employees? Did I do a decent job of summing that up, Dr. Minetti?
I think you did, yes.
So are 401k expenses, not contributions, forgivable? Yes, so that's the employer match of 401k. I believe the employer match of retirement benefits is forgivable, black and white. Yes?
The employer contributions to a defined benefit plan or defined contribution plan are forgivable. It does not say anything about the plan expenses. The other question I often get is, well, what about the amount I pay my payroll service provider? That's also not payable under the PPP loans.
Correct.
So the expenses for your, the health insurance company, the retirement plan, or your payroll service provider charge you to handle those plans are not payable out of the PPP loans.
And to expand on that a tiny bit, the only employee benefits that are able to be forgiven from what we understand is employee health insurance and then employer paid retirement benefits. You can't have your workers' comp covered from my understanding. You cannot. So even if it's on a pay as you go through your payroll company.
Well, now that depends on the state, because
right,
in some states, workers' compensation is a tax. And that makes it deductible.
I
It's a
apologize.
tax. In other states, it's not.
In Massachusetts, which I would say out of the 150 people we had, 100 of them are in Massachusetts, it's a private situation, so it's not done through the state. You will not have PPP forgiveness on workers' comp that you acquire through a private insurance company. So let's see next. Oh, are the employer portion of payroll taxes included in the 75% of forgiveness? Let me expand on that a tiny bit more. Dr. Minetti, how do we define payroll costs?
Well, when you're talking about the taxes, again, the payroll taxes, the employee, there's two halves. The employee pays half, the employer pays half. The employee half is included in payroll costs. The employer half is not.
All right, done. I'm a sole proprietor. If I do a workers' compensation check, do I then deposit it into my personal account? I don't understand that question.
Well, if you're a sole proprietor, you can't get workers' compensation on yourself.
So here's another one. Can one employee make less than the required amount of payroll, full salary within 25%, and another employee take on extra hours to make up for it? Got it. So they're asking if an employee's hours are reduced and that's why their compensation is reduced by that 25%, can another employee make up for that single employee's loss of wages?
Based on the guidance we have so far, I'd say yes. And especially if the employee who reduced their wages did it voluntarily, be careful if you're going to try to reduce somebody's wages, you don't get hit with a discrimination claim. Just about everybody's a member of a protective class in today's world.
Yep, that's true. So can the EIDL be used to pay a distribution to owners who usually take one in the fall every year?
Well, the EIDL can be used for, payroll costs. And if that distribution is for, compensation for services, the answer is yes. If it's not for compensation, in other words, it's just a distribution to the owners that they were absentee owners and didn't do anything, the answer is probably not. But we don't have the final say on that yet either.
If I got both loans, will my PPP loan eventually be lowered by the amount of the EIDL loan?
No, actually, they were going to, the EIDL loan is separate from the PPP. It's the EIDL advance. If you received the advance prior to applying for the PPP, they would roll the advance into the PPP loan. The EIDL loan is completely separate from the PPP loan. So there's three pieces: the EIDL advance, the EIDL loan, and the PPP loan.
All right, so the next one is, can you pay yourself as a sole proprietor one owner's compensation check for the 8-week loss, or does it have to be spread out over an 8-week period? I think that the safest thing to do, I'm concerned about the prorated amount. I think it would be very nice if they let us look at $100,000 of compensation over an 8-week window, but I wouldn't want to, if I could avoid it, exceed the prorated amount per week over an 8-week window. Do you have any different thoughts, Dr. Minetti?
Well, I mean, you could look at it at a per week basis. You could look at it at biweekly, which a lot of employees do, or the 1st and the 15th. as long as you have a systematic way to do it. I wouldn't pay it all out in one check the day after I got the distribution. That, could look at some questions in the loan forgiveness. But let's say you get your distribution, you cut a check on the 15th for the days up to that. You cut a check on the 31st or the 1st for day, or you do it every week. It doesn't matter, as long as there's some systematic way that you covered it over the 8-week period of time.
Okay. We have 40 questions. How are we doing on time, Dr. Minetti? I'm happy to
We're getting close. We got about 6 more minutes. I allocated all the way to the half hour for questions.
Very good. So what I'll do is I'll do 3 more questions, and then we're going to have to move on. So is the full-time employee headcount for determining forgiveness based on the average FTE from 2019, or is it based on the FTE that were on payroll at the time of applying for the PPP? My understanding is that there's 2 periods that you can use. February of 2019 through June is one window that you can look at for FTE, or you can look at January and February of 2020. Do you agree, Dr. Minetti?
It's February 15th of January 19 through June 30th, or January through February 15th of 2020.
Very, very good point. Thank you so much. All right. Is it reasonable? Is it reasonable to give yourself a raise to exhaust the PPP money within reason?
Again, within reason. If you go overboard, that could be a red flag. If you were making $3,000 a month on your small business over 2018 and 2019 and pay yourself, the $100,000 annualized amount for 2020, I think you could be looking at a, audit.
Got a couple repeat questions. I'm trying to make sure we're giving people value. How do you prove how the EIDL funds were spent? What I've seen a lot of clients do is set up a class in QuickBooks so that they can categorize them in that way, or separating the bank account. Do you have any pro tips, Dr. Minetti?
Well, again, you're looking at documenting them. You can set up a separate bank account for the funds to document that the checks came out of the bank account for those purposes. You can set up classes in your accounting system to tag them, or you can, do it on a spreadsheet for that matter.
Okay. After the 8 weeks of PPP, can you use the EIDL loan for rent and utilities going forward? Yes, EIDL is for operating expenses. You just can't use that during the 8-week period. Do you agree?
That's correct. You can't double dip.
So gonna keep trying to crush here. So included in payroll costs says healthcare benefits. Is that only Blue Cross Blue Shield? From my understanding, the only employee-related benefits are health insurance. Is that correct, Dr. Minetti?
Contributions to an employee healthcare plan and retirement plans.
Thank you. If an S-Corp owner also pays himself a salary in addition to other non-owner employees, does this count for amounts available up to the $100,000 for forgiveness?
The S-Corp salary that the owner receives counts. We're still looking for full guidance on the distributions. That may not count.
Very good. Thank you. Great. This is great. I have one last question. Do I need to pay my payroll all 8 weeks? My staff is setting up childcare and coming back with 2 to 3 weeks notice. Can I pay them extra for the 5 to 6 weeks? They do work to cover their full amount, the 8 weeks within 25%. I think that you have an 8-week window to spend this money, and we've kind of talked about what prorated is going to mean. So did you want to take a stab at that question, Dr. Minetti?
Well, again, if they need 2 weeks to come back, you can pay them for that 2 weeks, or you can let them work overtime for 6 weeks and, use up the money that way. As long as you spend the money, remember, they don't have to be in the office. Now, one of the things I'm going to say is if you have employees who are, where you're paying them to stay home for 2 weeks, you should be required that they're going online and doing, training, educational webinars, other types of training associated with the business. Yeah, I'm going to pay you to stay home, but it's not a vacation.
All right. As a sole owner of an LLC, can you make a lump sum payment for the amount during the 8-week period? Can it be a little more than the average monthly income that determined on the PPP loan? Check to your name and in the memo, owner's compensation. Everything has to be within reason. You can't just give yourself a big fat bonus, but if you normally took a certain amount of income, you can take that type of income. Dr. Minetti, this is the last question that we're answering. What do you think?
Well, again, I don't recommend, getting the loan and immediately writing yourself a big check, and maxing it out. Pay it out over the course of the 8 weeks, either, bi-weekly, twice a month, or weekly, whatever you want to do that makes sense for your business. And again, be reasonable. If remember, the lender's going to have to get all the documentation, and the lender already has your Schedule C. They know what you made last year. And if you give yourself a huge pay raise, odds are they're only going to allow forgiveness for what you made last year.
So I'm just going to close this up and say, for those of you that are clients of Brabo, I greatly appreciate your patronage. For those of you that feel like you could be better represented by a payroll company who cares, we host a ton of webinars like this. We've put out as much information as humanly possible to help our clients fight to save their businesses. If you don't know who we are, please Google Brabo Payroll. You'll see that we are 5-star rated on every platform. My hope is that when we see the PPP final guidance on forgiveness, we'll ask Dr. Minetti to come back, and we will send out an invite to everybody here. Dr. Minetti, thank you so much for making the time to come, and we will be seeing you soon.
Absolutely. Have a great day, everybody.
All right, Dr. Minetti, it's totally good with me if you head out. I'm gonna keep trying to crush through some of these questions to the best of my ability. We got 34 left. I just don't want to.
No problem. And if you need something, shoot me an email and I'll help you out.
Awesome. I greatly appreciate it. Thanks so much.
All right.
So I'm going to take my best stab, and I'm going to be willing to let you know if I don't know an answer. Okay. So I am a sole proprietor of a booth rental salon. I do not have employees. I applied for the PPP loan. Any money I make in the salon is considered my income, and I pay my expenses out of that, i.e. salon rent, utilities, insurance. How do I go about paying myself after expenses are paid for the 8 weeks? I also qualified for the PUA, wondering if I have to cancel that now that I've received the PPP loan. Unfortunately, neither of them cover what I normally make behind the chair. So Tammy, just to answer your question about the PUA, you just don't make claims for the 8-week period. You can leave your PUA, I think, open, but just make sure that you're letting them know that you are working and receiving PPP funds during this time. You don't want to double dip. And to his point earlier, you want to make sure that you're writing yourself an owner's check. When you write the check to an owner to pay yourself as a self-employed individual, are you then saying to cancel the check or to move it from one bank account or to another? So when you pay yourself as an owner, you just want to pay yourself out of where you're housing the PPP funds, and you're using that check when you write it to yourself as a receipt. Because when you cash that check, you'll be able to see an audit trail. In the beginning list of what can be used for PPP loan payments, what is covered under it, etc. Payroll, rent, and utilities. I own a preschool that was closed on March 12th. I have not taken a salary, nor my husband, since then. Can I average out the income lost and add it to our salaries during the 8-week period? No. I would say that you can give yourself a reasonable pay increase. I would not say that you can cram in a ton, but keep in mind you're only able to earn up to a prorated $100,000 each, which means that during an 8-week period, the maximum forgivable amount is going to be somewhere in the $15,000 range. Can I include utilities under my monthly dumpster bill? Unclear, Kathy. I apologize. It just says utilities. We know telephone, internet. You might have to make an argument for that, but I don't think a dumpster is a utility. How do you pay towards utilities that are on auto pay each month? Is QuickBooks monthly payment a utility? Rachel, I don't think so, but it could be something that you could attempt to argue. I would say that as long as you're keeping a spreadsheet or using class codes in QuickBooks to document expenses, whether or not they come from the same account that your PPP is in, you will be able to get forgiveness. I normally do an owner's draw, but I put myself on as an employee to up my FTEs. Is that better than writing a check under owner's compensation? I am not sure the answer to that. I apologize. What about profit sharing? I don't know the answer to the profit sharing piece. I'm sorry, Ryan. I wish I did. Scott, the number of employees, is it the number at the end of the 8 weeks or the average during the 8 weeks? We are not clear. We actually think that the full-time equivalents need to get back up to the full amount, or 75% of the full amount, by June 30th. That is something that I would want to circle back on the final ruling to make sure that we have that correct. if you receive more unemployment than you would from the PPP loan, can you just not spend the loan and pay the PPP back? Yes. Does the 401k employer match have to be paid within the 8 weeks, or is it okay to accrue it for later? Yes, it has to be paid during the 8-week period from what we understand. I don't know. Kevin, what about SE, estimated tax payments? I don't know what that means. As an S Corp with myself and one part-time employee, can I pay higher rates to get myself and the employee close to the rate received from unemployment pay? Justin, my thought is this: we are issuing some of our pay, our employees, what's called hero pay. As long as it's equitable and you're not showing discrimination and it's within reason and it's something that makes sense across the board, then you can give hazard pay or something like that during this time to attract people to come back to the workplace coming back from unemployment. And if they don't come back from unemployment, get that documented in writing so that you don't have your forgiveness reduced. Our school is closed mid-March, but I still have to pay rent. Can I include those months as long as I don't exceed the 25%? I am not clear on that. Do overtime hours count, or do you cap at 80 hours in a biweekly period? I do believe overtime counts. So we do not need to reach 100% employment to be forgiven. 100%, just 75% of employees returned. That is my belief. Yes. Do we need to bring back all employees or just 75%? 75% of full-time equivalents need to come back in order to have your forgiveness not be reduced. If you bring back less than 75% of your full-time equivalents, you will have the amount of forgiveness reduced. We have a restaurant that will be open less hours when we open, and because of reduced capacity allowed in the restaurant, we will never be able to get to our previous FTE number. But will the payroll we do use for the FTE number be forgiven? So keep in mind, the way that they defined full-time equivalents is people who are regularly scheduled to work 30 or more hours. So it might make sense for you to schedule all full-time employees only for 30 hours in a given week so that you can have a higher count. But we do understand that currently, the way it's written, if you don't get back to 75% of your FTE, you will have your forgiveness reduced by a percentage. I hope I answered your question. Linda, is dental insurance considered group health? No. For self-employed with no employees, we already talked about that. The loan application used was 2019 average payroll for eligibility amount determination. However, some of the employees in 2019 are no longer employed for various reasons, not necessarily specific to COVID-19. I have seen one forgiveness worksheet asking to list out 2019 employees, and then question is wages were restored to the same levels as 2020. How does this work if they were not employed in Q1 2020, but they were included in the 2019 average payroll analysis? Would the answer to this be yes, wages were restored for those workers? I think we're going to need to get more guidance from the SBA on that, Trish. It's not clear to me, but I would say that if you replaced employees with new employees, the other people's wages don't matter. That's speculation. And again, keep in mind the disclosure we had at the beginning of this. The EIDL advance does not have to be paid back, but what documentation is needed to show what it's used for? You just want to keep receipts for everything that you're doing. Make sure that I personally keep a spreadsheet that has PPP, EIDL advance, and then EIDL loan, and list all expenses that those funds went to cover. You could also do that with classes in QuickBooks. Classes is another way of categorizing expenses. EIDL grant. As a single member LLC, can I use funds to pay last year's income tax? I don't think so. No. Can I leave an employee on unemployment until a later date and hire someone new during the 8-week period? Amy, you might run into problems with discrimination there. So if you leave an old person on unemployment and hire a young person, it might look like an HR issue to me. David Silva. So if you're an employer who made over $100,000 in 2019, as far as PPP is, $100,000 paid over 32 weeks means you're capped at $3,200 per week as counting for PPP. It's actually way less than that. $100,000 weekly is, I think, $1,923 a week. And we're not sure whether it's $100,000 prorated over the 8-week period, which is somewhere in the $15,500 range, or if it's anything in excess per pay period, weekly, biweekly, monthly, etc. Amy, Correction, as a single member LLC, can I use EIDL funds to pay my last year's income tax? No, I would say no again. Operating expenses only. Thank you. Nice job. All right. Sorry if I missed this earlier. I'm a new S Corp. I bought a van for the company in January. I pay $500 a month for the van. Is that deductible, or does that have to be in the company name? You could probably, if you do pay it out of the company bank account, I would say that you could probably use it with the EIDL under operating expenses. You could make your your payments. However, this would not be a PPP considered expense, James. To clarify, self-employed quarterly estimated taxes to the state, as it sounds like federal payments are not included. If you're talking about unemployment insurance, yes, because it's just when it's being paid. If you're talking about unemployment, can you pay 100% on payroll for forgiveness? Yes, you can. What can the EIDL be used for? Operating expenses, software costs, overhead, rent. You could use it to pay gas, contractors. There's so many things that the EIDL could be used for, but you just can't use it for payroll, rent, and utilities during the 8-week period that you're using the PPP for. Hope that answers it. What about rehiring? 75% of your old workforce is hampered because you have a lot of legal work immigrants, H-2Bs and J-1s are not being allowed back in the country to work. David, it's important to think about whether you could even have those people be forgiven, because part of the forgiveness, you can only have PPP payment forgiveness for employees that their residence is in the United States. So people that are here on visas that are temporarily working, those wages may be excluded. Worth considering. Will it raise a red flag to add a family member to payroll who was not on payroll prior to do renovations? I'm not sure the answer to that. What if full-time employees left last year in June and December prior to the coronavirus? Do I need to replace those 2 positions to keep it in the headcount? As far as headcount goes, you can look at January and February of 2020, or you can look at February to June of 2019. The choice is yours. Are they still giving advances on the EIDL as well as processing the actual loan? If you're in line, yes. If you're not in line, you can no longer get in line. The only people that can apply for new EIDL loans are agricultural businesses. Is owner's compensation okay to do if we're not on payroll? Yes, as long as you document it. Is it okay to stay on unemployment as the owner if I put others back on payroll? While you have the PPP, it would make the most sense to give yourself PPP funds during that time because you have the money available. You should not be double dipping. And that is all of the questions. I hope you guys liked today's webinar. I hope you learned something. Please keep in mind the interim rules, the final interim rules for PPP forgiveness are going to be coming out within the next 24, 48 hours, hopefully. And when that happens, we're going to host another webinar. We're going to call Dr. Manetti back, and we're going to crush this thing for you, help you to understand it. I hope you guys learned something new today. If you work with a payroll company that doesn't understand this stuff, that doesn't give you expert advice, that doesn't get your back in a pandemic, please consider calling us. We're happy to take on new clients. I have a team of experts here at Brabo. Just want to show you one last thing on the way out the door. So as you can see, we're 5-star rated. We have 31 5-star reviews as it stands today. We don't have a single negative review that exists online, and we get those reviews because we have clients that love the work we do. And if you give us a shot, you'll love us too. Thank you so much for your time. Keep your eyes on your email for some follow-ups to new seminars. See you later.